Well, good morning, everybody, and thanks for being on time. Welcome to this morning's Monday morning market review with yours truly, Ian Giffen, on behalf of GoPro Trading Academy. So, guys, week one of the challenge has run its course. I think what I'll do this morning is just give a little bit of a debrief on what went down last week, but I don't think it's going to take that long, to be honest, because I'm sure that certainly in hindsight, many of you will agree with me that it was a pretty dead week. And hopefully, if you've been using and were using the technical analysis techniques that I've been teaching you guys, both in the academy, but also in the masterclass that we held, that you found it a lot easier to find reasons to not trade last week. There were some trades depending on your strategy. And by the way, I'm going to avoid talking strategy for the duration of the challenge. It's obviously unfair on anyone who has brought their own strategies to the table if I'm just supporting those folks who are trading strategies that I'm familiar with, or the ones that I'm teaching you guys. So I will mostly focus on the technical analysis side of things. But yeah, I think it's certainly been a quiet start to the challenge. And I think in many ways that is always a good lesson. I find that one of the most important things, and I know I'm repeating myself here, one of the most important things for new traders to learn is how to sit on your hands and do nothing. When markets are kind, it's very easy to be profitable, and we had an extended period of really, really good trading conditions up until a couple of weeks ago. The question then, however, is do you get to keep that money? Most people who try trading, especially when they start out with relatively kind trading conditions, will find it very difficult to do that. And that's one of the main reasons that people don't succeed as financial traders. So I'm hoping that you guys are starting to get your head around that and starting to see how important it is to do nothing when that is called for. Having said that, there wasn't absolutely nothing to do last week. And again, that is very much strategy dependent. So I'm going to be focusing really just on saying, well, whether the markets are in a range or not. And you'll recall from our training, really those are the two main categories of market condition. And it's our job when it comes to the analysis side of being a trader to determine whether you are probabilistically, as always, either in a ranging market or in a trending market. And remember, the definition of a ranging market is one that's not trending. So there is no other type of market condition. Those two certainly do get sliced down into sub-conditions, if you like. So we get strong trends, weak trends, impulse waves, corrective waves, and likewise even in ranges. But the main question that people struggle with is this one. Do we have a trend, yes or no? If you're trading a trending strategy, of course, then the answer must be yes, even if it's a probabilistic answer. And conversely, if you're trading a ranging strategy, the answer must be no. Again, that would be a probabilistic answer. All right, so let's jump into the charts. I don't think we're going to be as long this week as we were last week. First of all, as always, Euro USD on the weekly time frame. Certainly, we're seeing the market coming down into the lower regions of this channel that we've got on the weekly time frame. So there has been some directional bias overall, which is more visible, of course, in the daily time frame. But we are deep inside of the channel here on the weekly time frame. That did give us a breakout on daily on Wednesday, I beg your pardon. So Thursday was the first possibility for trading this. And okay, I won't do it again, but you should be, if you're trading H4 impulse, you should be in a trade that is at break even, but still quite some way off from take profit. So either going to get stopped out for no loss or it'll be a winner. Okay, so pretty straightforward as far as that's concerned. The cable on a weekly, interesting that it's come down. Remember, we've had the breakout on this, so using our HDC channel, this is still very much outside of the channel. It tested the support level last week very nicely. So that being said, we are still in a corrective or phase 2 wave here. It is also a valid, potentially valid W pattern at the moment. Remember when we spoke about price action, there's two things that we look at. The two elements are support and resistance and cyclicity. And of course, cyclicity forms as price interacts with support and resistance levels. And here we are seeing that interaction. We're seeing how price has come down to the support level. And last week, it actually respected it. It tested it, but respected it because it closed outside of that channel. Now, I'm not saying that we can predict what's going to happen next, but this is the phenomenon that we are talking about. Now, it's possible that that support level will be broken, but if it continues to be respected, and in particular, if we end up with an isolated and even a ringed isolated low here at the end of this week, then that really just goes to show you that the market is respecting that support level, at least for the time being. Remember, that doesn't mean that any strategy based on that phenomenon is going to produce an immediate winning trade, not at all. That's not the point. The point is that we build an edge, and our strategy is in effect the definition of an edge. We work that edge over time using the law of large numbers, and if it's a core strategy, it should obviously be a convex edge. So I know I'm repeating myself over and over again, but I'm sure you guys find that useful. Okay, so that extended bearish move also gave us a breakout on daily time frame. It did come back inside of that channel, so it's that respecting of the support level on the weekly time frame, you can see, has resulted in the market not respecting the resistance level on the daily time frame. Just at the moment, it has to be said, but Friday did close back inside of that channel. So an interesting interplay here between support and resistance levels visible on the weekly and daily time frames on the cable. Okay, so dollar yen also likewise. This one's relatively easy here on the weekly time frame. So last week we did see an isolated low. Remember, it will be non-relevant or treated as non-relevant because this ended up being a bullish engulfing candle. So quite an interesting week last week, and you can see that this trader, and this is just one of our funded accounts again, excuse me, this trader is nicely long on this one. So all well and good using advanced targeting, it would appear. So I'm sure you guys can see what strategy that is, and I'm sure many of you who are trading it should be in exactly the same position. So here on the daily time frame, however, you'll see that although we had that extended consolidation period through the last couple of weeks, we did get our breakout on Friday. So that's quite interesting. Also interesting how the strategy has worked out for us here. All right, so moving on. And please remember, folks, if you do have any questions specific to what I'm talking about here, please pop them into the chat box. Otherwise, if you're watching the recording, you're welcome to drop it into the comments below. All right, so dollar Swiss here on weekly. If you're a channel trader or a WM pattern trader, very nice ringed isolated low provided with the candle close last week. So again, that's quite a strong pattern for trading bullish trending strategies. You just need to make sure, of course, that your final selection criteria are met. And you'll notice, for instance, here, if you're waiting for a pullback before going long on some of our strategies, then that kind of seems to be actually happening right now as we speak. But dropping down now to the daily time frame here, you'll see how we also had this bullish breakout as a result. Close outside of that channel. It's testing it again. That's what was resistance, now turned support. Let's see what happens during the course of the day. Again, another interesting interplay between market price and a very clear what was resistance, now deemed as support level with a close outside for 2 days. Let's see what happens during the course of today. This could be very bullish going forward if this support level continues to be respected. All showing dollar strength across the board over here, of course. USD Cad, well, not so much, I suppose. Canadian dollar overall still showing weakness against the strength against the US dollar, beg your pardon. So here on the weekly time frame, we've seen now this previous low that we discussed last week get isolated and in fact ringed with last week's bullish candle. We are still, and I see I haven't actually updated the analysis on this, so I beg your pardon. At the moment, we are still outside of the channel, meaning that last week it did continue to respect this resistance level. So let's see what happens during the course of this week. Obviously, if that comes back inside, it will be a sign that this continues to be weak. It has been weak all for quite some time now, certainly with that corrective or phase 2 wave closing inside the preceding phase 2 wave. It's showing real weakness there. So even though it continued to go down, we got another bearish impulse of phase 1 wave here. Well, let's see if that is strong. We're not trying to predict what's going to happen next year, of course, but quite indicative that this is not showing the same kind of strength that we're seeing across some of the other currency pairs with the US dollar. All right, Aussie very much going sideways here, still on weekly. We did have that nice overlay that hit take profit nicely last week, but very much inside of our channel, nothing doing here at all. On the daily time frame, however, we did see that bearish breakout. You'll see this is quite a common picture across the Aussie and Kiwi pairs. I'm sure you noticed that. But it did close back inside the channel on Friday. So again, a sign of weakness. Bearish breakout led to very little after that. And here's the Kiwi version. On weekly, you'll see it's a little bit more aggressive in a bearish direction with another overlay hitting target quite easily during the course of the week. And this should be on daily. So the difference here quite startling in that we're very much outside of that strongly formed channel that it really shows us several support and resistance levels that have been respected. So interesting from our point of view here, but again, on Friday, we did get that retracement. However, this is a very strong breakout, clearly. So again, if you're trading the relevant strategies, I'm sure you know what to do here. And well, I'm going to leave that for a separate discussion. All right, so in any case, you can see I'm always tempted to jump into the strategy discussion. That's the end, obviously, of our majors and minors. So going to our yen crosses, as I always like to do here on the euro yen, ringed that high very clearly last week. So this is now very much a retracement wave. We've no idea how long it's going to last, but still, clearly, this is also a trending market. So again, you know, we're able to say trending. It's even still technically a strong trend, but we are in that corrective phase 2 wave. So depending on your strategy rules, you know then what to do. Here on daily, you'll see we had that breakdown and sequentiality of cyclicity, gave us an overlay. We did discuss this early last week, I think last week's Monday morning market review, but we did get that overlay that also, I think we took profit on the open last week, Monday. So nothing doing here. If you're trading WM patterns, there is still a potential M here, obviously, because we've still got our outside C closes for at least for the moment. So keep an eye on that, but definitely inside of that channel. All right, we can move on now. Right, Gbp Jpy, very similar picture, isn't it? So our trader here is long on this one, clearly using advanced targeting. In any case, let's just have a quick squiz. Yeah, so that's that one there. All right, so that is obviously we're not talking specific strategies here, but the strategy that they have used, obviously giving them a bullish trade. Right, lots of excitement here on the farm with our first brood of ducklings. Uh, all right, so that aside, staying relevant to the topic here. Also had that breakdown in cyclicity for that bullish trend, long term, easy to trade bullish trend here on Gbp Jpy that we've discussed for quite some time, but very clear breakdown and sequentiality of cyclicity. So not only did we have a failure to make a higher high, higher close here, as we discussed last week, but we got a very clear bearish impulse impulse wave here as well. So this trading, and to be honest with you, I'm not entirely sure what strategy it is because we do have, let me just go back here again. Oh, I beg your pardon. So last week, quite right, the trader was saying, well, we don't yet have that high ring during the course of last week. So they were still looking for that bullish impulse candle. I beg your pardon. So my fault, that's a perfectly good daily impulse. And you'll notice as well that, I mean, if we just get another higher close here today, the trade will be almost at break even, almost zero risk. So that's a good one, really, really good one. So yeah, apologies for that. Also descending back into strategy talk. Okay, right, if you hear some farm work or animal noises, you know why. The workers are got going early this morning. Right, so Swiss yen, nice one on this where, okay, I think we did discuss it, although perhaps not. We got a second overlay, which was very nice, also hitting take profit. But otherwise, there's nothing doing here, of course. Oh, we also got a bullish overlay on daily. So no trending markets here, very clearly inside of a channel here on weekly. And likewise on daily. So quite extended waves on daily, but nevertheless, you know, this is definitely not a trending market. And you can see that our HDC channel, both of them, in fact, both the 3 and 4 wave HDC channels were perfectly respected in terms of that support level during the course of last week. So I'm only showing you that again, just to reinforce how important it is as a price action trader to be able to identify these likely levels of support and resistance, and then without predicting, see how price reacts with those. So that's so much the basis of our strategies. And all of that comes back down to cognitive biases of market participants as well. That's really the power behind the whole philosophy of being a price action trader. Okay, so CAD, yen, same kind of picture, interestingly, with a ringed high formed last week. I see that this trader didn't take this one. Again, with the funded accounts, we've got quite strict rules about exposure, about limiting exposure, and even then we advise our traders to be even stricter with their exposure because of the evaluation rules, but still very much inside of those at this point in time as this trader. So technically, this was also a bullish trade, obviously, for this morning, but again, I need to stop talking strategy. All right, so but strongly trending still on weekly, even if it is now officially in a phase 2. So actually, that means we wouldn't, I beg your pardon, wouldn't be looking for a bullish trade this morning. Confusing myself here. Hopefully, you guys are keeping up with us here. Right. Aussie yen again. Look at that, guys. Look at that. Such, you know, such a lot of correlation across the yen pairs, and that is something that you really need to be careful with. So please make sure that you don't overexpose. And similar picture here as well to CAD yen. So no trade here actually. So let me not make that mistake again. Moon is asking on the Swiss yen overlay long last week, does the color of the candle matter? Swiss yen, whilst I'm here, let me go to that. No. So it basically what we're testing at the moment on overlays is it needs to basically be a directional candle. So if we're going to go long, it needs to close in the top third or quarter We haven't yet determined that. Top half is a little bit too broad, it seems. So we're getting a little bit more strict about that, Bruno. But no, the color of the candle is not important. So that setup candle is actually bearish with the close below the open. What's more important, though, is the position of the close. So that was what we took there. The position of the close is very much in the upper portion of that candle. Hope that answers that question. Right, so let's get back down to these others. So we looked at Aussie Yen and Kiwi Yen. You know, there's obviously the New Zealand dollar is a bit weaker, and you'll see that on the Aussie Kiwi as well. But nevertheless, still very much a similar picture. We very much in a retracement wave for this, but still a trend and respecting that was resistance turned support level, very much outside of the channel here. Perfect. Okay. Moving on to Euro crosses. So Euro GBP, nice bearish trade here. This trade is already at break even, as you can see, trading with the advanced targeting. So there are still some nicely trending markets. So coming back to my point when I started out this morning, for those of you who are latecomers, you please do go watch the beginning of this video because I made some important points, but one of them being that it's important to know when to do nothing and when to act. So this trader is doing a really good job of staying out of the markets that they need to, and yet still trading the markets that should be traded. So this trade has been going on for quite some time. It survived using the trading stop rules. It just survived last week. Doesn't always, but nevertheless, I think you guys who are using our trailing stop methodology can see that they work pretty darn well. So they keep you out of the market when you need to be out, generally speaking, and they keep you in when you need to stay in, generally speaking. Obviously, nothing is perfect. We always try to make things better, but so far, that's, as I'm sure you'll agree, those methods are doing a really, really good job. Here's Euro Swiss. Some folks actually I saw a couple of you on your accounts took a long here, are bullish on this. I'm not sure why, guys, because this has been in a bearish phase too now. That's the third week after having had that preceding high isolated. I don't understand, if you're trading our strategies, why you should be long on this. Possibly this week with an inside bar, you might be looking to go long again, but certainly not last week where there was that was not an inside bar. The preceding week was, but not last week. So getting into a trade last week on this on the daily time frame would have been a mistake. So here you can see the daily time frame, how we've had this flag pattern I mentioned last week. It has started going a little bit more sideways. We might be seeing a resumption in bullish cyclicity here. Again, I don't want that to sound like a predictive statement. It's not meant to be. But it is interesting how the market has found lower time frame support inside of our channel. So not making a lower low, lower close here as it did there is quite interesting, and likewise it did it again. But let's wait and see. And as you guys know, this is one of my two least favorite trading pairs. Here's the other one. Not wanting to sound biased in any way. Weekly time frame on Euro Cad, it did ring that low, but it is also a bearish high test. So interesting. Let's wait and see what happens. But this is still very, very bearish in nature. So we are obviously now technically in a retracement wave on the weekly time frame. We do have that three-wave channel support level still being respected through the course of last week. We need to wait and see what's going on there. Obviously, this has been tradable on the daily time frame down to the lower time frames during the course of last week, and you may well still be in a bearish trade on this. So it just depends on whether you survived the spike or not. So I did see a couple of you guys didn't get taken out by that spike, which is luck, to be honest, which also means that you hadn't trailed your stop when you should have. So much as you are still in the trade, please remember to follow the rules with the trailing stops. Okay, Euro Aussie Weekly, no change here. We spoke about an overlay, I think, a week ago. That went on to hit take profit as well. Total breakdown and sequentiality of cyclicity as of Friday's close. This trend on the weekly time frame is absolutely over with a phase two. So please bear that in mind. And of course, now on the daily time frame, you'll see that we had a bullish impulse candle showing quite a strong bullish reversal here, but still very much inside of the range. So if you're trading ranging strategies, you might be interested in this, but otherwise not. Okay, last of the euro crosses on weekly euro NZD. Still, likewise, we had a breakdown in cyclicity over here. If you're trading overlays, you would have actually had a loser and a winner. So you'd be break even on overlays for this for last week. For the last month, I beg your pardon. So dropping down to daily, however, you can see that here again, we're seeing that New Zealand dollar weakness through the course of last week, where we did in fact get a breakout. There was a lower time frame loser on this as well, I think, but still outside of the four-wave channel, very much outside of the four-wave channel, but in a retracement wave of that phase two. Right, going into our pound crosses, bullish engulfing candle last week on weekly. Interesting, very, very bullish still. So we may, in fact, technically now I'd say that that retracement wave has now come to an end. Our trader is already long on this, but has been for quite some time. This is an advanced targeting that they are using here on daily. So you can see they've moved past the break-even level. So they're really locking in some profit here on this one. So good luck with that. I hope it keeps on going. Okay, Gbp Cad, weekly time frame. Well, that's false breakout. We already spoke about this, so not interested in anything here. There on the daily time frame, looks like this was also a bearish false breakout, not confirmed yet. If today's candle closes higher than that preceding high, phase one, then it would absolutely be a false breakout confirmed. So not interested in doing anything here at all. And again, folks, I want to just remind you that if you're trading your own strategies, then please don't be affected by what I say when I say I'm not doing anything here at all. Your strategy may well call for you to do something. Okay, so and that's going to be the case for the rest of our challenge. Right, so weekly time frame, nothing changed here compared to our discussion last week. Still very much the same. Again, we did see an outside close, just an outside close last week, Thursday, but it immediately pulled straight back inside of the channel. So hardly a sign of breaking resistance. And at the moment, even though the market's coming back up to retest that level, at the moment we have to deem that still as resistance, of course, because market price is still closing below it. Right, last of the pound crosses here again, Kiwi weakness, still inside of the channel, but as we speak, testing our preceding resistance level. And yeah, that's all I can really say for that. But clearly the Kiwi weakness gave us a breakout on this last week. So very much outside of the channel on the daily time frame. And in a strong impulse wave of that, we did get an inside bar here on Friday. But remember, the rule with inside bars is that we treat it as appropriate for the conditions. Nevertheless, you should have actually been in a trade on this already. And given your trailing stop methodology, again, I'm descending into strategy talk here, you would have survived that. And today it's well on its way to hitting take profit if you're using standard targeting. Again, if you're using your own strategies, apologies. All right, so Cad Swiss, that's going to be a non-relevant isolated low. So yeah, we've still very strongly bullish overall on the weekly time frame here. This is just this very long extended impulse wave on the weekly time frame. It's going on, that's a couple of months already. However, on daily, we had the breakdown and sequentiality of cyclicity. The trend line was broken. We had a bearish phase one wave. We had a winning overlay. And now we had a retest of that level on Friday, and it's respected it so far. In any case, it looks like it wants to respect it today. I mean, it's still early in the day for today's trading, but let's wait and see. Nevertheless, Friday clearly respected that as a resistance level. If this high gets ringed, then that would be something quite interesting, and in fact would be a setup for a bearish overlay. So right, Aussie Swiss, similar picture on, well, this time on weekly, however, where we've had a breakdown in cyclicity. We didn't get an overlay here simply because of that candle structure. Muna, just going back to your question, so couldn't short this. But in any case, meet inside the channel now for, well, certainly when last week we had that isolated high was ringed, which brought our channel up to, four-wave channel up to that point. So now technically inside the channel, also phase two. Actually, that's not a phase two. That might be some incorrect analysis on this one. But I will leave you to ask questions on that. Okay. If you see anything wrong with that, but definitely nothing for us to trade on that. Aussie Cad on weekly, definitely a false breakout. We spoke about that before, but on daily, we had the bearish breakout. However, it looks like today it wants to come back inside that channel, but you don't know. If today rolls over and closes back outside of the channel, that will be very bearish. It'll also be a valid M pattern. However, if it closes anywhere above that low, it will be an inside C close. Aussie Kiwi gave us a breakout last week. This has been quite a messy pair for a while. Long extended moves, certainly on the daily time frame, but not giving us that much success or opportunity to trade. In any case, for the first time in a long time, we're having a channel breakout on the weekly. So that's quite interesting. This trader might not belong on this because of overexposure, but nevertheless, as far as I'm concerned, that was a setup. Right, but outside of the channel here on daily as well, very, very clearly, and maybe you're waiting for that pullback. But yeah, this is, again, looks like quite a strongly bullish market, at least for the moment, speaking probabilistically. Okay, last two of our currency pairs, Kiwi Swiss. Still on the weekly time frame in a bearish corrective wave here, quite strongly bearish, obviously, last week with that bearish impulse candle. But that did give us a breakout during the course of the week on the daily time frame, but with Friday closing back inside of the channel. So again, a sign of weakness. If you're a WM pattern trader, well, that's fine. We're still quite some way away from the potential X. So yeah, that's something that you can bear in mind if you are trading the WM patterns. And last but not least, we've got Kiwi Cad, which, although very much inside of, and again, I haven't actually updated the analysis on this, so not that it's going to make any difference, but it's, yeah, this is still very much inside of the channel on weekly. However, of course, that pattern, that very strong bearish wave on weekly, looks like this on daily. So I know some of the folks have been trading this for a while as well. But at the moment, we are, and Friday actually ringed that low. At the moment, we are definitely in a retracement wave of this. It was quite tricky last week with that very strong bearish breakout to jump in on the next day. So were you trading the lower time frames, that was valid, but I think the trade wouldn't have survived it. I'm pretty sure you wouldn't have had a full loss there, but certainly with this retracement wave, lower time frame bearish trades, you should be out of that by now. And biding your time, waiting to see if we are going to have a resumption. Okay, so that's it, folks, in terms of all of the currency pairs that I'm commenting on. I'm still going to restrict myself largely to currency pairs because, well, the evaluation account and the funded account is the 28 currency pairs. And as I've mentioned before, really the objective for me for this challenge for you is to get you into that $2 million funded account. And the first stage of that is the evaluation stage. And our trading challenge is all about getting you into the right kind of mindset to be able to pass the evaluation stage. So rigorous consistency across the board, being able to do the right thing consistently, especially when it's difficult, learning to stay out of the market when you should and just sit on your hands. And then when it's go time, you go, go, go. And you make hay while the sun shines. Thank you, Alberto. You're absolutely welcome. All right, folks, any questions before we wrap this up? Everyone happy?